Welcome back. Hope you're having a good morning. Well, for starters, the gift Nifty suggesting a start in the green. Let's see where do we go from there. Well, let's move on then. Caplin Sterile is a subsidiary of Caplin Point. Well, they received a couple of, approvals. We have with us Mr. Vivek, the COO at Caplin Point, who joins us on the show. Hi, Vivek. Good morning. Thanks so much for joining in. Well, has there been a slowdown in any kind of approvals you're getting for your US arm? That's Caplin Steriles. Could you tell us? Could you give us further details?
We actually have a good record of approvals this year. We've had about 4 or 5 approvals in the last 12 months, I believe. Now, the incentive is to make sure that we launch these products on time and establish a strong enough portfolio for ourselves with fairly decent market share. So no slowdown in approvals.
Okay, no slowdown in approvals. That's good to hear. The US FDA, Vivek, hi, good morning. Thanks for being with us on the channel. The US FDA completed inspection of some of your facilities and there were 4 observations that were issued. Can you tell us, what is the nature of these observations and, what is the way forward now for these facilities?
Yeah, so we had one FDA inspection in May, and we were quite satisfied with the outcome of the inspection. They were largely procedural in nature. None of them were related to data integrity or repeat observations or anything like that. Like I said, mostly procedural. We've already responded to them. Now we are anticipating the EIR to come through in the next couple of months.
Okay, so in the next couple of months, you will get the EIR report from the US FDA for the Gumidu Pundi facility. I think as of Q4, Vivek, your order book was about 230 to 240 crore rupees. What does it currently stand at right now?
So as described before, we are targeting close to 300 crore as the revenue for Caplin Steriles this year. We're well on our way. Obviously, as usual, as typically what happens is the first 2 quarters, it's a bit slower than the 3rd and 4th quarter. You will start to see that once we publish the results in the coming few weeks and stuff. But we remain fairly confident to make sure that we get to this target. We also have a new production line that is getting up by about October of this year, and another one by December of this year as well. So that should help augment our targets this year.
All right, and that's on Caplin Steriles, right? 300 crores is what you're guiding for. And as you mentioned last time, you'll have broken even as well out there. So what's the margin band you're looking at on that base of close to around 300 crores? And how do you see the trajectory moving ahead?
Yeah, so our target is to make sure that our Caplin Steriles' gross margins and everything are very similar to our parent companies, which is somewhere around, when I talk about EBITDA and all of that, you're talking about 30% plus. Obviously, what happens is we charge off as expenses all of the R&D spend and filing fees and facility fees and all that, which are quite heavy when it comes to the US, especially in the initial stages. But if you net off all of that and then compare it with the parent company, we're fairly similar. Going forward, I think once our revenue catches up a little bit more and then the R&D spend starts to become a smaller percentage of revenue, I think you will start to see the EBITDA margins of Caplin Steriles to be quite similar to Caplin Point.
Okay, all right. So the EBITDA margins of Caplin Steriles will be similar to Caplin Point. Got that? You have a significant amount of cash on your books, over 700 crores, almost 800 crores actually. Do you plan to use that for anything, any acquisitions that you're looking at, anything that you've identified that could perhaps fructify in the next 12 months?
Obviously, we want to be living within our means. We have taken on a large Capex. Caplin Steriles, we're going for expansion in phase 2 and phase 3. We have our oncology plant coming up. We acquired a small unit for API in Vizag. We're also coming up with a new oral solids facility close to Caplin Steriles as well. So we have a lot of Capex going on to the tune of about another 400 crore, I think, within this year and next year. We want to add another 200-250 crore minimum to our reserves within this financial year. And don't forget that there's going to be some OPEX and some more R&D coming up for some of these new facilities and stuff. But when it comes to something inorganic, we're not against it. Our eyes are open. But the one thing that we want to always try and avoid as a principle for the company is to not go to the banks for any borrowers. So as long as we stay away from that, we sort of sleep peacefully, I would say.
Mm-hmm. Vivek, while 86% of your revenues comes in from Africa, you are looking to grow the balance. 14% of your revenues comes in from the US. How many products are currently under review with the US FDA? How many approvals are we likely to see this year?
Yeah, so around 82% are from Latin America, actually, around 3-4% from Africa, and the rest from the US. Today, we have 18 approvals of our own and another 5 approvals with partners. And then we have actively 7 products under review with the FDA. So we hope that that should start to come through in the next 12 months. We have a pipeline of close to 25-30 more products. So eventually, we're looking at a basket below 50 plus products in the injectable and ophthalmic space. When oncology and OSD starts coming up, we will be targeting the semi-regulated markets like Latin America, the ones that we are operating in today, before we move into US and EU and stuff.
Okay, got that. One final question then, Vivek, from my end. There was a lot of pricing pressure, I understand, in the complex generic space, but now there are some reports that that has stabilized a bit. Would you want to tell us how the situation is as far as pricing is concerned?
Yeah, so there's 2 parts to this, right? So for a small to mid-sized company like ours, especially a newer entrant into the US, we feel the pricing pressure a lot less compared to some of the larger established players with probably bigger overheads. So pricing, while it is under pressure, I wouldn't say that there is no pricing pressure at all. But companies like us sort of feel it a little lesser, I would assume, compared to the larger companies. Having said that, there is a fair amount of stabilization that is happening in the US right now. Continuity of supply without any breaks is going to be obviously weighted a lot more than someone with just cheap prices, you know. So I think as long as we remain compliant, we have the goal of excellence in sight rather than just pricing advantage. I think we would be one of the last people standing.
Got it. All right, we'll leave it at that. Thanks a lot for joining in. Appreciate your thoughts. That's Caplin Point.